Good morning and happy Monday. Welcome to today's episode of Morning Wealth. Sorry about not doing the Friday episode. I was a bit unwell and got good rest over the weekend though, and I'm back. Many thanks for checking in. Three things that we will talk about today: US jobs data, the week ahead, and the best month ever for green bond issuances. The Dow closed about 134 points lower or 0.5% lower on Friday as President Trump tested positive for coronavirus but reversed from steep losses earlier in the session after House Speaker Nancy Pelosi said that she was optimistic about striking a deal on a new aid package. The S&P 500 also was down about 1%. Nasdaq was lower by about 2.2%, led by a fall in technology shares. Investors were also passing data showing job creation slowed last month. Employers added about 661,000 jobs in September, below economists' expectations of about 800,000, and the first time since April when the net hiring was below the 1 million mark. Average hourly earnings slowed to about 0.1 from 0.3, but the unemployment rate dropped to 7.9 from 8.4, a drastic improvement that exceeded the estimate of about 8.2. This was clearly enough to satisfy FX traders as they did not sell dollars after the jobs report. Dollar yen fell only a few pips before settling higher, while Euro USD briefly rallied above 1.1730 before giving up on those gains. The greenback ended the day higher against all the major currencies except for the sterling and the Japanese yen. On one hand, the data solidified the view that economic activity continues to rebound, although at a slowing rate. On the other, it doesn't include the glut of layoffs announced by companies in the recent days, including Disney, American Airlines, Allstate, potentially putting a dent in the job creation that we will see in October. During the week, however, Dow Jones jumped about 1.9% and S&P 500 climbed 1.5%, and the Nasdaq also gained about 1.5%. US and Asian stocks look set for gains today as traders react to a possibility that Trump may be able to leave hospital as soon as Monday. In terms of the week ahead, Australia's macro policies will take center stage with the central bank meeting tomorrow ahead of a full fiscal update. RBA will probably hold as it prepares to boost stimulus in November is what Bloomberg Economics is expecting. The government is expected to unveil more fiscal support, including infrastructure spending and tax cuts. The Fed and the ECB publish minutes on Wednesday and Thursday. The FOMC report may offer details on the debate over new guidance and whether policymakers have considered increasing asset purchases. ECB's account will be eyed for clues on how headwinds are being interpreted. There are also speeches on the deck. Fed Chair Jerome Powell will be speaking and ECB's Philip Lien will also be speaking tomorrow. Christine Lagarde is going to speak 3 times in the next 3 days. In terms of data from Europe, we'll be looking out for Germany's factory orders, industrial production from Germany, France, Spain and Italy will also be looked at. The UK's big print is the monthly GDP data that will be coming out on Friday. The August report may mark the last big surge for several months is what Bloomberg is expecting, warning the recovery may slow sharply in the fourth quarter. BOA's Andrew Bailey also speaks on Thursday. US politics will dominate the week as investors focus on Trump's health and vice presidential debate that will happen on the 7th of October. On the corporate side, US companies may price about $15 billion in high-grade debt in the next 5 days, in line with last week. In terms of earnings, we'll be looking out for Levi Strauss tomorrow, Tesco and Family Mart midweek, 7&I and Domino's on Thursday, and Delta will be reporting at the end of the week. Lastly, oil traders will pick over OPEC's annual world outlook on Thursday for its take on global supply and demand, with projections right out to 2045. September was the busiest month ever for green bond issuance, with sales of corporate and government bonds totaling more than 55 billion. The spike in new deals pushed the total green bond sales this year above 200 billion, slightly ahead of the pace of 2019. Social bond volume surpassed about 70 billion, more than quadruple the full year total for last year. So strong issuances continue across all kinds of bonds that we have seen this year. That's the update. Stay safe and healthy, everyone. Have a wonderful week. I'll speak